Walmart misses earnings. What is that going to say about the markets and your money? That's coming up on 3 minutes on Markets and Money. Yesterday after the bell, Walmart missed earnings estimates, of course, also talking about inflation and their forward outlook. Of course, they've already had a lot of warnings about inventory builds that were going on and concerns about shopping. Now noting specifically that inflation is beginning to impact not just their inventory issues, but also their store traffic as well. In other words, seeing a slowing of their store traffic. Now, Walmart is one of the biggest kind of footprints for the consumer in the world. Of course, this is also feeding over into potential risks for Amazon as well. Have sales slowed at Amazon and Target? I mean, these are all the retail footprints that we're watching for the consumer, and how that potentially lays back into earnings for the overall markets and the economy itself. That recession fear is certainly gaining some traction here as of late as we start to see weaker economic data. This morning, futures are set to open lower, and that's going to bring the market back to retest this 50-day moving average. We've been talking about this the last couple of days. Yesterday, the market actually kind of flitted back and forth most of the day, retested the 50-day intraday, bounced off of that actually twice, closed up slightly positive for the day. Not a big move at all here. But again, markets continuing just to really kind of work along this 50-day moving average, turning that previous resistance level, now that we broke above it, back into support. So it's important, as we said yesterday, the markets continue to hold the support level, and we need to do that through the end of this week. If we're going to build a good base here and potentially have a lift from this point to allow the bulls to continue to rally the markets, we need to hold above the 50-day moving average for the entirety of the week. If we break back below this today or tomorrow, particularly with the Fed coming out, we're going to potentially see a retest back to these previous bottoms that we were setting in right around 3730 on the S&P 500. So again, we've got a fairly tight range here, but a break back below that trend line is going to suggest we're back into that negative trend, that this potential little rally that we've had in the market is likely behind us, and there's more risk going forward. Today, lots of earnings coming out, both pre-market and post-market. We've got some big names, Microsoft, Google, others all coming out. Lots of names continuing this week. Next week, also very heavy earnings. By the end of next week, we'll be through 80% of the S&P 500. So we're going to have a really good handle on just how much inflation is impacting earnings, how much they can pass pricing on to consumers, and what those real risks are. We're seeing some kind of mixed results right now. 3M reported better earnings. UPS reported good earnings, but noted slower volumes going out into the next quarter as consumers contract their spending. So again, on both sides of the ledger, there's certainly some concerns here about whether or not this rally can continue to gain traction. But again, as I said, the most important thing here, we're still on a buy signal. This is encouraging, but we're getting very overbought now. And the markets are sitting here struggling with trying to make an advance. So again, a lot of that fuel that we had for the bull rally has been used up, and this is going to start to limit our upside potentially of where this rally can go to. So again, monitor your positions, manage your risk accordingly. Probably get a better opportunity to add some exposure once we get past earnings season, and we can kind of start to forecast better about what the rest of the quarter is going to look like. I'm your host, Lance Roberts, for 3 minutes on Markets and Money. See you back here tomorrow.